Tomorrow night, it is family night. We have a winner for you. You'll meet Bradley Linch of Duncanville, Texas. Get this, he's the #1 collegiate stock picker in the country. So what kind of advice does a guy like Bradley need? We'll find out when Jonathan Steinberg joins us as well tomorrow night. It's young guy night tomorrow night on Mutual Fund Investor at 7 o'clock Eastern.
This program is sponsored by the Burger Funds.
Good evening, everybody. Welcome to Family Night here on Mutual Fund Investor. I'm Bill Griffith. Tonight's guest spends his time pumping iron and picking stocks, but not necessarily in that order, and he's pretty darn good at both. Bradley Linch of Duncanville, Texas, is this year's winner of the National Collegiate Investment Challenge. So what's a stock maven doing on a mutual fund show? Well, the point is that many fund investors also own a number of individual stocks as well. So we want to address that tonight. It's all part of diversifying your portfolio, you know, investing in a variety of vehicles to help reduce your level of risk. Tonight we're going to talk about diversifying into common stocks. Jonathan Steinberg, the editor-in-chief of Individual Investor, is with us as well tonight. If you have questions about investing in stocks, things you need to know about before you invest, what stocks Jonathan likes right now, you want to talk about where you should be investing if you're at a certain age, of a certain amount of money, a certain a goal or objective, long-term, short-term, we'll talk about that tonight. Give us a call on the toll-free lines, 800-752-CNBC. Of course, is the number. All right, should individual stocks be part of your investment strategy if you're only in mutual funds? When we come back, you'll meet a stock-picking champ who's added a lot of muscle to his portfolio. We will press into action right after this. Tonight's family night, of course. Just about everybody is familiar with the stereotype of the dumb jock. And I'm sitting next to a guy who's a jock, and I'm calling jocks dumb. Well, he's not dumb, this one. This 25-year-old from Duncanville, Texas, is a true champ when it comes to investing, as you'll see in tonight's family night profile. Whether Brad Linch is pumping iron or crunching numbers, he's living proof that brains and brawn can coexist successfully in one human being. The brawn part is easy to see. Just stop by the gym in his hometown of Duncanville, Texas, outside of Dallas. Those shiny things that he's pulling up are solid blocks of steel. Brad worked here as a personal trainer after he got out of the Army. It helped put him through college.
I like working with people, helping people out, helping people meet their physical goals. Two more, Tom, come on. Big ones, there you go.
But now at the age of 25, Brad is a college graduate, and he's beginning the next stage of his life, the stage where the brains do the heavy lifting. He's embarking on a career as a stockbroker. It's something that he's dreamed of ever since he learned about the stock market in his high school economics class.
I was 17 years old, and I went in to open a brokerage account here in Duncanville, and the broker said, well, you've got to be 18 to open an account. So I was like, oh my goodness, it's my money. Why should I have to, you know, be 18?
An older friend opened the account for him, and the broker taught him the fundamentals of investing.
Went out and read everything I could, watched TV, I watched CNBC. I'd say that I just kept reading and charting my stocks, trying to make more money so that I can invest money.
His self-education has paid off. This spring, he won $5,000 and first place in the National Collegiate Investment Challenge. He beat out nearly 4,000 other contestants by almost doubling the imaginary $500,000 stake.
So I finished with $898,000, up almost 80% in a 9-week period, and the nearest contestant had $713,000. So I greatly outdistanced him.
But for his own portfolio, Brad uses real money. He's turned the $2,000 he started with into $50,000. He says he follows about 30 to 50 stocks. When the market is open, he monitors it with a Crow-Trek. And he spends 2 or more hours each day keeping up with the financial news.
I'll cut out newspaper articles in the Wall Street Journal, Business Daily, or local papers about stocks and keep all of those and see what a stock does when news is released.
He also talks stocks. Some of his investing ideas come from the employees of the companies that he has bought. And he likes to compare notes with his brother, Lee, who followed him into investing and is now a broker.
Right now I just picked up some Ambers you gotta look at their annual report.
As he begins a career of making money for other people, Brad is quite bullish on his own future.
As my income increases, I'll be able to put more in the market, and hopefully I'll be a millionaire by the time I'm 40. It'd be nice.
Well, we'll find out if he'll make it. Can you imagine the dinner discussions at Thanksgiving when this family gets together, huh? Going over those annual reports over the turkey dinner. Let's take a look at where Brad stands at the moment. He has 3 objectives: to save $2 million for retirement, $200,000 for a house, and another $200 grand, as he put it, for his kids' college education, even though he doesn't have any yet. Brad has only stocks in his portfolio, as we said, no bonds, no mutual funds, which we'll talk about. Some of the stocks that he holds include Michael's Stores, Acclaim Entertainment. Brad also has $1,000 in the bank, earning 3% interest and no debt. Also with us tonight, we should point out Jonathan Steinberg, editor-in-chief of Individual Investor Magazine. Nice to see you. Welcome back.
Thank you very much.
How did you do that with the doubling your money in that short period of time in that contest?
In the contest, well, it was tough. I mean, I got up.
You were following, what, about 100 or 200 stocks in that?
Probably about 100
contest,
stocks,
right?
and anytime any stock made a new surprising earnings forecast or anything that might move the market in that stock, I took a closer look at it, and I came out with 15 stocks in my portfolio that increased the value, and I lost money on 2. There was a time there were some stocks that were really overpriced, and I made a big gain on a short sale of Hungarian Telegraph and
So you're
Cable.
able to short stocks as well?
Right,
Okay.
you can short and buy.
Did you do a lot of day trading?
Oh, no, a lot of week trading, but no day trading, really. There was one position that I shorted at 39, covered at 23.5. Then I bought it at 23.5, and I sold it at 27.5, all in a matter of 2 weeks.
Which, you can't do that for real, I don't think, if you get the wash sale rule, right? If you sold it out your position and then took another position again less than a month later?
That's if you lose money. But if any time you make a gain, they'll gladly let you pay taxes on that. But those were all gains, so yeah, I would be paying taxes on those.
If it had been real money, you think you could have done the same thing?
Well, I mean, I could have. I might have bought the $200,000 that I bought in each position may have moved the market more than it did in the contest, so the gains might not have been so great as they were in the contest, but it would have been pretty much the same general concept.
We should point out that Brad now has a job, too. You're going to be a broker just like your brother at the same company.
Right. I'm employed with Edward E. Jones. I just took my Series 7 last Monday and got a 93 on it, and I'll be training for 8 weeks, and then I'll start opening accounts here at the end of December. So anybody that's trying to make some New Year's resolutions and want to increase their portfolio.
He'll go far. You know what I mean? He'll go far. What can you add to that, Jonathan?
Well,
I mean, what can you tell this guy that he doesn't already know about stock picking, right?
Well, this is encouraging for, I think, all your viewers, that someone as young as he can have such an experience.
Stocks versus mutual funds. I mean, we preach the mutual fund story on this show, as you know. But some people find that they can do better themselves if they're going into stocks themselves. But they have to do the homework, obviously.
Right. But you have to do the homework for mutual funds, but some people are more comfortable with the built-in diversity that funds provide. I'm comfortable with both, and I think, like our readers, a lot of them do both.
The homework, though, is going to be different vis-a-vis going to stocks or into mutual funds, right?
It is different, but it does follow the same basic trends.
And those are?
You're looking for value, you're looking for industries that you like, the individual stocks within a portfolio. If you're looking at mutual funds, is analyzing a stock as well. So there are things that are very similar.
You're going to tell us about your ideas on what you need to know before you invest. You say call for the financials. Now, if you're a Peter Lynch, he makes it very simple. I mean, you look to see how much debt's on the balance sheet and whether they've got some cash on hand and whether they're earning any money. And he says then you can pretty much learn that much. How much more do you go into it?
A bit more. I mean, I agree with that this isn't brain surgery, and you don't have to be so intimidated by the financials, and a lot of people, I think, are. But I do like to call the company. I like to look at estimates, check margins. And
margins?
Net margins, operating margins, things like that.
What do you look at when you're trying to pick a stock?
Well, each individual stock I look at differently depending on how it's trading. I look at past trading patterns and where I think it's going to go in the future. Sometimes I'll buy a stock that's breaking its 200-day moving average. Sometimes I might buy a stock that's making new highs. It just all depends on each individual situation.
So you employ technical analysis?
I employ both technical and fundamental analysis.
the technical analysis you'll use to tell you when to get into that particular stock. Use it for market timing purposes?
Right. Anytime you have technical analysis, if the fundamental analysis, say earnings per share come in below estimates, go below estimates, then the technical analysis and the fundamental analysis, if you look at them both, the fundamental analysis can blow the technical analysis out of the water in 15 seconds. So you have to look at both together.
Yes, indeedy. Now, you also, as you point out, need to know what your own risk tolerance level is. I guess we'd call him pretty aggressive.
I think you need to set realistic goals. You have to know what you're going to be comfortable with. You have to be like your own best friend. If you know that you really can't handle a lot of risk, putting yourself into risky situations will probably end up making a bad trade. You'll have to get out before you want. You could be scared out of the marketplace. So really set realistic goals.
One more before we go to the break. Educate yourself. About what?
I think now I'm talking mostly for first-time investors or beginning investors, that your goal here is not just to make money, though that certainly is what you're doing this for, but it is a realistic goal to hope to become a great investor. This is a very level playing field. The information explosion that has taken place has to be taken advantage of.
Absolutely. The other one that Jonathan recommends is contact your broker. Well, you can contact us here. Jonathan Steinberg of Individual Investors with us tonight, and brand new budding broker is with us as well tonight. Give us a call, 800-752-CNBC. We'll be back. We're taking your questions tonight on individual stocks as well as mutual fund investing. Our guest tonight, Jonathan Steinberg, editor-in-chief of Individual Investor magazine, and we've got Brad Linch, the budding broker from Duncanville, Texas, our family night guest tonight as well. Let's go to the phone, see what's on people's mind. Ed in California, good evening.
Yes.
Hi, Ed.
Hi, how are you?
Good, how are you?
Good. I've got money invested in mutual funds. I'm 64 years old, and I wonder if I should buy stock at my age for retirement.
Have you ever bought stocks before?
Yes, I have.
How'd you do?
Good and bad. I know enough about them to be dangerous.
And why would you want to go into stocks now? You feel you're not getting enough of a return from the mutual funds?
Yeah.
Okay. And what kind of a risk tolerance level would you say you are? Pretty aggressive, pretty conservative?
I'd say aggressive.
Okay.
Well, if you're aggressive and you've invested before, I think you definitely should consider investing in particular stocks. A way to sort of hedge your risk would be to really pick your situations very carefully and make it not such a large percentage of your portfolio. And you can really, turn around the percentage gains in your portfolio. You can, through a few winners, really enhance your portfolio.
I'm going to ask you an unfair question, and I don't want a whole portfolio, obviously, but a couple stocks that might fit that category. For somebody who's already retired, who considers himself aggressive, who hasn't been picking stocks for a while, but is going to look for some kind of a return from those stocks, what kind of a company would you think about, or a sector right now?
Well, one stock that I like that Brad owns would be Michael's Stores. It's conservative in the sense that it's a retailing stock. It has great growth prospects. It dominates its niche, which is like hobbies and arts and crafts. Another one would be NCAD, which is a small inkjet printer company. They've had great earnings that just came out a few days ago, and the stock is traded down, so I think it has great value right now. They're really a tremendous amount of opportunities.
You know, these are the kinds of questions you're going to have to answer when you become a broker.
I think I'm ready for them.
All right. Carolyn, good evening.
Good evening. Brad, first I want to wish you a lot of luck in the future.
Oh, thank you very much.
I think it's great. I've always been really interested in the stock market, too. My question is for John.
Yes.
I would say that's why when you invest internationally, you should invest for the long term and allow the time period to equalize for you.
I think that's true. But that's the case for investing in general. I think it really should be perceived as a long-term endeavor.
You got a favorite stock right now?
Amber Stores on the low end, and then either Michael Stores or 3Com on the top end. Cobra Golf.
Cobra Golf, another one? We got that one. Nice to see you, Brad. Good luck with that career.
Oh, thank you very much.
Let us know how you're doing.
I sure will.
Brad Linch of Duncanville, Texas, our family night guest tonight. Jonathan, always nice to see you. Thanks for joining us tonight. Jonathan Steinberg, editor-in-chief of Individual Investor magazine based in New York City. Thanks for joining us tonight, everybody. I'm Bill Griffith. Jim Rogers and I will see you again tomorrow night. Good night, everybody.